And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, October the 6th, 2021. Well, the S&P finally did decide what was going on and likely where it's going to go. And that all occurred as we broke above, just in Globex, 43.60. And now all we need to do is break above that 43.66 level and get this, what I'm now going to put together as minor wave 2. So you'll notice that what I've done is I've removed its original position, which is right here, took away the minor 1, minor 2 that I had labeled on last night. And now I will just count this as an A, B, C, B, and we're in a C wave. And it looks like, if I had to say, let me just open that up and we'll take a peek, that we've got a 1, 2, 1, 2, and likely 3, 4, 5, a 3, and a 4, and a 5, and that we really should complete it. Now, it's been quite this sideways rally that the market continues to hang its hat on that I was having a problem with. And the reason is because what I'm expecting to happen next, and still, even with this count, will continue to look for it, was that we're falling off a cliff and just taking a swan dive into the abyss, which lies below. That is still, in my mind, the next move. And what we're completing is a sideways, basically flat correction. And it's going to be labeled wave 2. And that would leave us still with that falling off the cliff type of activity. But then, so we're still labeling this as an intermediate third wave down. And again, just to review, within that intermediate third wave, there will be 5 waves of minor degree. Now, you've heard me say before not to rush a count. When we rush a count, it tends to put things together too fast. And I may have already been guilty of doing that several times, but I think I just did it again. And so, but because I continue also to say that the count as in the market is fluid, because we're dependent on the market to tell us, not me to tell the market in terms of this is the Elliott count. Okay, market, you need to follow it. I put down what my best position would be based on what I see right now. But as the market continues to give us information via the trades, then we're able to extend out and to talk about it. Now, if you remember, even when we were going through this, I said that the fact that we had not broken below that minor wave 1 at 42.60, that we kept open the possibility. Still, even here, I left it as a 1-2, but left open that if the market rallies back, which again, we had a strong up day, but it's all remaining within a corrective move. So this interim bullishness that we've been finding, as many people are moving back into stocks like Amazon, Google, Microsoft. They're just, but basically they're really moving into Amazon and Google, and a little bit here and there and some other issues, but those are the 2 main ones that I see. And both are heavily weighted in the S&P as well as the NASDAQ. So this particular move is a little bit perplexing because it just keeps rolling and rolling along and is stuck between 43.66 and 42.60. So we basically have 100 points here of S&P points of this market just basically sitting sideways. And so that kind of leaves our intraday trading not necessarily empty-handed, because it was a very solid rally. And basically from about 1 o'clock, so for the afternoon, it rallied very strongly, and it rallied pretty strongly this morning as well. So we had one blurb up, and then they quickly went slam dunk. But then once the market got going, it just held a little pullback and then just rallied and just continued, as it continues now as we move into the Globex session. So what can we look for from here? Here are the retracements, and we've surpassed the 382 cleanly. We're about ready to surpass the 50% and possibly very cleanly. Now, being that it's a flat, I'm not really suspecting that we're going to get all the way up to 43.91 to 44.10, but it could. It's not what I would expect out of this flat correction, but this is an ABC, this is an ABC, this is an ABC, and this is 5 waves down. So the C wave is complete. And it failed to take out the low of B, or even to equal the low of A, the starting point of the A wave. Not that they're related. This C wave is related to this A wave. And it basically almost came down. So, the little differences that we have to accept are nothing major, and they don't really pose any threat to expectations or to the count. So right now, I'm leaving this as a minor wave 1. Here we have minute wave A, minute wave B, and we're finishing up minute wave C, and I'm going to stick a minor wave 2 on top of it once it's done. So I will basically have to put those in so we can see what I'm talking about. And it doesn't change the little bit larger picture, doesn't change it at all. And so that's what I really want to make clear, that my expectations, even as I was talking last night, saying that my expectations, even if this ends up being a B wave, so if that's how I had to label it, then it would still, all it does is delay the inevitable, which is a large decline sitting out there waiting to happen. That remains in place. Now, I'm going to think that it's going to come in a third wave, but that third wave would resemble a C wave, because there should be, they're identical in the force, they're identical in acceleration to downside in this case, and so we can run them in conjunction with one another side by side, and then once we're down there, what would follow will give us more clues as to what essentially is happening. So for right now, I mean, tomorrow, I think we still have a little bit more to finish up, excuse me, in this C wave. We make it up past 43.66 because we're actually at 64.25 right now. So it's not all that much further. So I would expect that that pretty much is going to be a given. That kind of puts the top in over the wave A, which is perfect. But then we continue to have resistance, probably a little bit right here at 43.73 and some additional at 43.89, and then Fibonacci at 43.91.92. Top side, 44.10. Now, wave 2 can get awfully close to doing almost a 100% retracement of wave 1. That would bring it all the way back up to 44.72, if that is truly in the cards. Now, so that's the level it cannot break. That would then go beyond the price territory of wave 1, which supposedly it's correcting. And that breaks the rule. So we don't break rules, and then we keep our counts clean and correct. So for tomorrow, a little bit more rally. I I would think that we're starting to exhaust ourselves because we've done it now, got sold off, we bought it back, we bought it up, got sold off, bought it back, got sold off, bought it back. Now, if indeed this is an ABC intermediate, excuse me, minor wave 2, the next sell-off, they won't be buying it back as quickly because the sell-off is going to be more intense than that one. And it should be way more intense than that, way more intense than that, way more intense than what we've already seen. It should be pretty destructive to price, and it should have several points of acceleration within it. So more to come on that. Let's leave it right here that we're doing an AB and we got a C. We have our resistance point right there, 43.66, which I think should be broken. And then we have 43.73, I said. Yeah, it was sort of down here, 73, 83, 89, 91, and then 44.10. Beyond that, we have some other strong resistance at 44.42, and then upwards around that 44.72. I really don't want to see it up there, to be honest with you. That would likely produce that other situation that I talked about. So I'll go ahead and toss it out there now so that we can have it in the back of our minds if that is what is going to pan out here. And that would be that this was A, this was B, and we got this as a C wave to complete on a primary level, wave A. So then we're in a B wave. And what this just doesn't, it's still corrective, and a B wave would be corrective, but that B wave would be expected to get up much higher. So unless this is A, B, and this C wave is just going to kick butt, then exactly how it's going to unfold is a little bit confusing in terms of what we can expect. Now, one thing I can do, if indeed we're in a C wave, let's compare it to this A wave. So I'm going to use the 4-hour chart, 42.60 up to 44.65, 60, and then I'm going to take it down to the low of the B wave, which is right there. Okay, so where do we have some overlap? We do have some overlap right around 44.04 to 44.10. We have some right up here at 44.19, so there's a little zone. That fits. Here's our 618, still below. We have a little bit of a cluster there. So our first cluster, not really a whole lot. So like I said, I kind of expected it's going to get above 43.66.50, but then we have 43.79. And that's where the C wave would be equal to the A wave. So that is a very common, that's a most common. Next beyond that is 382, 236, 382. We've got a cluster along with another additional one on just a retracement level. So this actually is now lining up to be more of the zone, topside zone, where it should be contained. And so our first level is going to be 43.79. And we likely can consider that zone up to 43.91 because it just seems that the market is overdoes things every now and then. And if it does what the NASDAQ does, which I think it will, it'll overdo it. And pullbacks should be shallow until this C wave is done. And then we should get a very clean announcement that all that's being rejected and the downside is coming back. Now, what could kick it off? They're continuing to buy it now because the Congress in Washington are very close to coming to an agreement on extending the debt ceiling, at least through December. So we're not going to fall into the abyss right now. And everybody thinks that that's the greatest thing since sliced bread. So they buy the market. That's fine. We let them. It fits with what we're talking about. But I'll tell you another thing. It fits because this is corrective. So they're buying into bullishness, which really probably they shouldn't, but they're going to do it anyway, in a correction. And so that just gives me even stronger support that what comes next is a blowout. And it would be a wave 3. Even if it's a wave C, it's still going to be a blowout. So I'm going to leave it there. No need to really pontificate and get on with this thing. So for tomorrow, again, I think a little bit higher. We have a nice zone up above 4,400. But I'm really thinking that 4,420 on the top side, 4,404 on the bottom side, and 4,410 just right in between. So that's where I kind of think it goes, if indeed it doesn't initially stop right here. 43.79, so it can come in a little bit below, a little bit above, and that caps it, and then we start to turn lower. So we can get up to 43.79 all in Globex. Now, tomorrow we have jobless claims. Then on Friday, we have the employment situation. So we have 2 days that I think the market's hanging their hat on to make further decisions about most things. So if the employment numbers really don't come in and show some improvement, or just are not going to be in line with what expectations are, I suspect they start to smack the market right away. If there's anything that comes out that the Republicans and the Democrats in Washington, D.C. and the Senate in particular cannot come to an agreement to extend the negotiations and the debt ceiling conversation to December, which allows the government to run until December, then I think that we're in trouble. And because we've already heard from the Treasury Secretary, we've already heard from the Federal Reserve Chairman that messing with the debt ceiling right now would not be a favorable move. In fact, it would just lead the country down a very disastrous path. So that's why we got some of the sell-offs, because if you're not going to do it, oh, you are going to do it, oh, you're not going to do it, oh, you are going to do it, etc., etc. Same thing here. Oh, you're not? Oh, okay, so you're not going to do it, and China's going to drive us all into bankruptcy because of the Evergrande? Okay. Well, oh, that's okay. You find you've paid your bills? Okay. So if the market's rallying on, who knows? But still, there's enough participants that it's giving us the moves that we need, and it's also very correct. That's it. Next update, Thursday, October 7th.